Good day, everyone. Alice here from Sophie Financial Network. Today is May 29, 2023. Today, market was closed, so I just thought about it that we can just analyze some macro chart that we rarely get into it, but I think it's gonna be beneficial for everyone to look at these charts time to time, and I think that's the time to look at some charts and see where we at based on these charts. So first chart that I want to show you is market breadth, which is S&P 500 uh, stock breadth, and this chart shows number of stocks are trading above 20-day moving average. So 20-day moving average is kind of 200 uh, day moving average. It's kind of interesting moving average just because all institution traders, investors, which they have no idea about the technical analysis, they just look at this one as like a support and market and S&P 500, I should say, respect this one. For example, if you look at the October low, market, just pay attention to 200 SMA on a weekly basis, which is kind of like a longer trend line for all investors and institutions. Market respected that one and pivot the market to the upside. And we see from October low, since now S&P and Nasdaq and the other indexes, they have remarkable move to the upside, and that's the key for some big money managers. Right now, this chart tells us when we get here, like during this area, which is this is COVID crash, for example, and this is October low. When we get close to this area, so we should expect market is getting close to the bottom. And when we are at the top here, which is 88.96, so this is the level that we are expecting. Market is pretty high, and we should see some correction or kind of like a crash, something like that here down the road. So this is, for example, this is in May 2021, and signal for a corrective move is coming. But again, this is not a timing indicator. This is kind of like showing us the warning sign or kind of like a leading indicator that, hey, guys, be careful. Traders, investors, just be careful. We are at a kind of like overpriced right now based on this chart. And just be careful. It's time to hedge yourself. May 2001, 2021, nothing happened. Basically, market went up to the volatile, choppy, um, and the rally continues for some technology stocks over to the summertime. But October, November, December was pretty hard time for all investors. You see that the choppiness on the top, and then January 2022, which is kind of like 8 months after that, market just collapsed, going down 20%. For Nasdaq, it goes down like a 30% down to the October low 2022. So right now we are just at middle of the no kind of like a range between top and bottom, no man's land. And if you're bearish for the market, you should expect that this one is coming down more to here to this area, and we'll see kind of like the the bottom information, and we can just start buying stocks when we get there. But if you're bullish, so this can go higher, and this means lots of stocks are coming back to the rally, and they're going to help us to see the market is going up and higher, and S&P 500, Nasdaq, they're going to outperform very well the other indexes. And this chart is going up just because the number of stocks are trading above 200 SMA or moving average. They're going to just increase the number. So when they increase the number of the stocks trading above 200 SMA, this chart is going higher to this area. So I'm not sure even what would be the catalyst for the downside or upside, but I'm kind of like telling you this is the chart that at this time, unfortunately, doesn't give us a clear information. If you want to go with the technical analysis, for sure, we've got lots of wires here. So you see this wide range bar, and also this lower shadow. This is a weekly chart, by the way. This lower shadow gives us kind of like support from the market. However, if we take out this pivotal point to the downside, probably the bigger correction is coming for the market, which I don't assume it's going to happen. We will get into the volatile period, especially June period. If you haven't looked at my previous videos, make sure watch the previous videos, daily analysis, weekly analysis as well. We are getting into a danger zone specifically for Nasdaq, but right now this chart tells me that probably we will see another kind of like a corrective move to the downside, not extreme to the downside. If it goes here, that would be fantastic buying opportunity for the next rally, because whenever we get here, we're going to see lots of buyers, lots of institutions are coming back based on this chart. So just be careful on this one. The next chart I just want to talk about is Fed fund rate. So Fed fund rate, we are at 4.83%. And whenever we get something around 5%, it's going to break something. So this is 2007, 2008 crash. You see, this is a sharp spike in Fed fund rate, goes about like a 5%. Just for 2-3, I should say 2-3 months. They just pause and then pivot. So when they pivot, look what happens. So everyone is expecting pivot. So if you haven't seen my bond video, make sure watch that video as well, because be careful what you're wishing. You're wishing for pivot, but pivot basically means a recession, and crash is coming in recession. So Federal Reserve, they are going to do pivot just because we've got a crash, we've got a recession. And that's why they're just going to try to help institutions like employers and bring the cost for the loan down, bring the cost down to help them to loan more. And that's why they just bring the interest rate down to help the economy. So that means economy is not in a good shape right now. If you believe that we are heading into recession, so this means we will have a crash first, and we will have kind of like a bad economy. Weak data is coming down the road, and that's why Federal Reserve is going to pivot. So Federal Reserve is not going to pivot before crash happens, basically. Even due to COVID period, like this is the COVID time. So Federal Reserve here, COVID was already done. So everyone knows that we're gonna just see some disaster, which was a disaster period of time for the businesses. Lots of people just getting jobless, and Federal Reserve pivot the interest rate substantially in emergency session to zero, almost zero, to just keep the economy boosted and keep helping the economy. So right now we are at the top here, pretty close to 2007 top. So if you are in a bearish mood, if you are just optimistic about recession, which is not good optimism, but anyway, so if you're forecasting for a recession, so I'm kind of like in camp with you, but I'm not sure if this recession is coming next month or so. I believe this coming recession is coming 2024, and Federal Reserve is gonna pivot sharply, something like this or something like this in 2024, ultimately to this level, to this area. I'm not expecting to zero, I'm just expecting to here. And even gradually it can go down, not something like this. It can go down something like this to the downside. So we'll see how it goes with Federal Reserve, even if it can go something like this. So it's going to just play out with the economy, but we will see how it goes based on the soft landing. So this is a Fed fund rate. The next chart that I want to talk about is this one. So this is XLY, which is consumer discretionary ETF, compared to XLP, which is consumer staple. So consumer staple is kind of like a necessary things that you need for your life, like shampoos, like, for example, the stocks that I can talk about is Procter Gamble, for example. They're producing detergents, shampoos, and those stuff, toothpaste, and you need it for life, right? So you don't care about the recession or so. So consumer staple is something like that. Consumer discretionary is something about like pleasure, like a leisure, like a traveling, like those expenses that you don't need for life, but you want to have it for like a better quality of life. So when this chart tells me, especially with this bullish pattern forms here, I assume that Nasdaq is gonna go higher and higher. And sure enough, we had very, very nice rally, especially last month. Everyone is talking about different things, but based on this chart, we forecasted that Nasdaq is going to outperform the market for a short period of time. And sure enough, we had this rally to the upside, nicely going up. And right now, I'm just looking for a top information here. Probably we can just bring the estimate down to here to this area. So we'll see in next week or so if Nasdaq just to see spike up and then higher shadow comes up. So that means XLY is done for the rally, and money is gonna flow over to XLP, which is consumer staple, and consumer staple is gonna be Dow Jones stocks, like heavy, lazy stocks that are kind of like a dividend payer. Lots of people, they just got hype from NVIDIA, from Microsoft, from some technology stocks, Meta, for example. So this one just has a booster. Those ones help out very well for the XLY. But right now, people are just, again, kind of like a scaring about like CPI, like inflation, those numbers, and they're just talking about of those fundamentals, which we don't know exactly. That would be catalyst for sure. I'm not going to ignore that, but based on this chart, this tells me probably we will have a spike in Nasdaq, but that's going to be a top information. And again, I'm just referring to my previous analysis for stock market. Make sure watch that video, weekly analysis, and that's going to helpful and tell us exactly Nasdaq is getting to the top information. So we are not timing the market. We're just seeing the charts. We're just coming with different charts, and we will see how it goes. The next chart that I want to talk about is here. So this is a Nasdaq compared to Russell 2000. So Nasdaq is technology-based index. Russell 2000 is small cap, basically mainstream stocks or zombie stocks or whatever you want to call it. So whenever we got into this move, like this is 2020 before COVID crash, and you see that. So when Nasdaq is just outperforming Russell 2000, we just hit the COVID crash, and lots of stocks are coming down together. In that period of time, we saw that Nasdaq or technology stocks were at the top. This is kind of like a 2000, this is exactly 2021 December, which Nasdaq was already at top. And you see that Meta, Google, Amazon, they're just rolling over, stall out to the downside. Pretty sharp sell-off for Meta, for example. It goes to, I can't remember, very, very low period of time. You see that stocks just spiking down sharply. So this is the period that, again, I was on the top. Right now, you're seeing this one, which is Nasdaq outperformed Russell 2000, but pretty unhealthy, I should say. Even not something like this, which is the healthy. This is very, very unhealthy. Spike up to the upside, hit up another higher high based on this chart. Is this going to be the top? I believe so. We are pretty close to the Nasdaq top. At least some stocks in technology words, you can see they're at the top. Everyone is talking about new all-time high for different stocks. Sure enough, they can hit new all-time high, but in overall, Nasdaq composite, which is going to be a Nasdaq 100, I'm not sure if all of them hit new all-time high. Probably some stocks like NVIDIA, they already hit. Apple, potential. Microsoft, potential new all-time high. But those are just individual names. And the other stocks cannot go to new all-time high and probably will see a stall out. And that's going to be the new downtrend for NASDAQ. So we'll see how it goes. This is interesting. This is NASDAQ to Dow Jones. So we are kind of like outperforming situation. So this is a very, very nice pattern. So you see, this is kind of like reverse head and shoulder for NASDAQ compared to Dow Jones. This is a neckline. We just went all the way up. I believe this is gonna be the top. This top goes to this white range bar and also this supply area. So here is supply area, and this supply area can be the end of the Nasdaq rally. This means again, money can move over from Nasdaq to Dow Jones, which is kind of from the technology, the big dividend payers, Coca-Cola, PepsiCo, financials, energy. So they're going to be Procter Gamble, for example, consumer staples, utility. They're going to be outperformer for the next 3 to 5 months. Healthcare, for example, United Health, and industrial ones. And Nasdaq and technology, they're just getting weaker and weaker. I believe this period could be interesting to watch. Not forecasting again, but definitely you should keep an eye on this to see how this chart reacts to this. I'm pretty bullish in Dow Jones. I believe that, well, believe is kind of like a strong word, but I think Dow Jones can hit new all-time high this year. And that's going to be a divergence. You see that Nasdaq is not close to new all-time high. S&P is pretty far away from all-time high. Russell 2000 is down there and just struggling to get even 20% or so. But Dow Jones hit the new all-time high. So this is kind of like a divergence for the next recession, I believe. Moving on to the Nasdaq compared to S&P 500. So this is Nasdaq compared to S&P 500 chart. And as you see here, another formation, nicely reverse head and shoulder to the upside, breaking through. But right now, again, we are getting back to this supply area. This is topping formation. And when we have like a spike like this, we're going to have like a sharp sell-off as well. So this, when this one loses its momentum, then it's going to just roll over, and technology again is going to be the leader of the downside. So just be careful, guys. If you are betting into too much technology stocks, just it's better to diversify your portfolio. I'm not saying sell all your stocks. I'm saying diversify your portfolio into some energy, some healthcare, some financials, which no one is paying attention to. Like no one likes, for example, banks, because everyone is talking about like a banks or so. But banks, I believe they're in a good situation right now to just nibble into it. All right, so this is the last chart that I was talking about today, and I hope this video finds you well. And if you like this video, please smash the like button, subscribe to our channel, and see you on the chart shortly. Have a good one. Bye-bye.